Thank you, Mark, and everyone. Welcome to our session. Is everyone fired up, ready to go? Awesome.
Do it.
Yeah. So it's a pleasure to be joined by some ETF pros on stage. We chatted a little bit earlier. Everyone's great. And I know what's on everyone's mind is the regulatory concerns. So for this panel, we're going to split it up into three parts. The first part is addressing those regulatory concerns. The second part is the outlook for the spot ETF and estimated timeline of sorts. And then the third part is putting it all together in terms of what are the options available for advisors. So let's kick it right off, and I'll start with Matt.
Yep.
What's the holdup from your perspective?
Well, I think there are two holdups, or there are two ways to view the holdups. On the one hand, there's the technical holdup, which is the arguments that the SEC has made that folks like us haven't satisfied. And then there's the political holdup.
Okay.
So the technical holdup focuses around the question of market manipulation, or to be more specific, whether you can conduct surveillance of a regulated exchange to monitor the potential for market manipulation. And I know all of us and others have done a lot of work to try to demonstrate to the SEC that that's true. I think that's a very clean view of what the holdup is. There is this other overarching piece, which is whether the regulators want there to be a Bitcoin ETF, and some people think that is the holdup as well. We've been working on satisfying the technical question, answering their questions. They've been good questions. We've provided a lot of data, and I think we're getting close there.
Got it.
But people have different views of the driver.
Got it. And then Dave, I know Grayscale has been working a lot behind the scenes. Can you talk to us a little bit about what's going on?
Yeah, sure. We've been working feverishly, as have the vast majority of the industry. And this has been something that the industry has been working on for the better part of the past 8 years. One of the things that I always like to highlight is, the ETF industry has been innovating for a very long time. And this is the process that happens when you're trying to put a new asset in the ETF wrapper. And so we think of SPY or VOO or IVV as very boring, plain vanilla S&P 500 exposure. But in 1993, it was a pretty exotic exposure to be put in an ETF wrapper. And as the industry has evolved and as the industry has advanced, each one of the innovations has resulted in a very similar process engaging with the SEC. And so we welcome that process. The SEC has actually been pretty transparent in what their concerns are. And we also think that we have very good answers to some of their concerns. So we continue to have a high quality engagement with the SEC, with multiple divisions of the SEC. We obviously have a rule filing in front of them right now, with a robust comment period, with a robust number of comments. I'm sure people in the crowd have commented, thank you. And we look forward to the SEC's decision on our filing on July 6th.
Got it. And then Lori, from your perspective, you've been active on the futures front as well. What's your engagement been like with the regulators?
It's a collaborative process always. I would just say, I think it's pretty clear what the SEC is asking for and what they're looking for, and that's regulation of the exchanges. I think our process is making sure that we're continuing to educate regulators and working with them. It's the same process that we're going through with investors. It's wonderful. This room is filled with people that are embracing blockchain, Web3, fantastic. There's a lot outside that would be purchasing the ETF that are still trying to understand, what does this mean? What's the impact on the asset class? And there's a lot there. This is a new asset class that was developed, a little over a decade ago. So every effort that we make, both with regulators and with investors, is just education first, and I think that we're going to get there.
Got it.
Dominic, I was going to say one thing, just to piggyback on something that Matt had said. There are technical concerns on the regulatory front. There are also technical concerns on actually the operation of this product in the secondary market listed on a national stock exchange. And the industry's ready, right? The industry in the US market may not have a spot Bitcoin ETF, but many of the market participants, the traders, the authorized participants, the custodians, the administrators, they're doing work for products that are already listed around the globe. And so the marketplace is actually ready, and we feel really confident that from a technical perspective and from a trading perspective and from a market infrastructure perspective, we're ready to go. And so we're also excited about that.
I would just add one thing on top of that. I know we're moving quickly, but importantly, people have filed for Bitcoin ETFs in the US 8 years ago.
Absolutely, yeah.
And I would argue that the market was not ready for a Bitcoin ETF.
I would agree with you then.
So we should give the SEC some credit. They first said no back then, and that was appropriate. It's a spectrum. I think the three of us on the stage would now argue we're close to or over the line at which they should approve it. But it's not the case that they should just approve everything. The market really wasn't technically ready to have an ETF even up 4 or 5 years ago, certainly 8 years ago. Now I would argue that it is for the reasons you mentioned.
Right.
Okay, so let's pull back the curtain a little bit. What are these technical roadblocks? We've heard about manipulation, and I think the onus is probably on the exchanges. Have you guys produced any research, and what has the feedback been directly from these SEC regulators? Matt,
Yeah, I'm happy to start. Maybe a good place to start is with an analogy or with a similar circumstance. So there's a gold ETF, but the SEC can't approve a gold ETF because the spot gold market is unregulated. So how do they get around that? Well, they require there to be a regulated market of significant size that they can use to have proxy surveillance of the underlying spot market, right? And so for gold, there's the gold COMEX futures market, and they now say that they looked at the existence of that regulated market in order to allow a spot market. The equivalent in crypto or in Bitcoin is there's the CME Bitcoin futures market, which is a large regulated market that you can surveil that would pass the same test as the COMEX market. And the argument that we've made, at least, is that you can get that proxy surveillance requirement by surveilling the CME Bitcoin futures market. So in our application, we have an application that comes due, I think, around July 1st. Okay. We submitted over 200 pages of academic research to show that the CME Bitcoin futures market now satisfies the requirements of being the leading source of price discovery, the primary market, and that you can now get the surveillance requirement checked off by doing that. It's a complicated data-driven argument, but we, Fidelity and others, have submitted huge amounts of research to demonstrate that that's the case. So that's the market manipulation technical piece.
Got it. And Dave, you've produced research as well?
So yes, the entire industry has produced voluminous research that suggests that the Bitcoin market is of significant size. Some of the other technical factors that the SEC has raised is this notion of having surveillance agreements across the exchanges, and just more generally, identifying areas where they believe that anti-manipulative behavior could be sussed out. In approving a Bitcoin futures product, which by the way we're totally supportive of. It's a great step in the right direction, but implicitly, if you're comfortable with the Bitcoin futures, which is a derivative of the underlying market, which is inextricably tied to that underlying market, then we believe that you should be comfortable with the underlying market as well, or a spot product. The reality is when you take a look at some other characteristics about the futures product, versus the spot product, the CME futures settle to an index that is made up of 5 exchanges. Our index that GBTC currently settles to is an index of 5 exchanges. There's a tremendous amount of overlap there. And additionally, GBTC as a conversion into a product, we have almost 1 million investors, and a lot of secondary trading market volume and a lot of data in the secondary market to support how the product is behaving in the market. So we think there's other factors as well that are supportive of a spot Bitcoin being approved.
Got it. And then Lori, from your perspective, in terms of the research?
Yeah, again, I think it's very simple to us in this room. But, it is, a spot product is different than a futures product. And it's clear cut with the CME. It's a regulated exchange. And I think from, our perspective, what we see is that's the insight. Once there's some regulated exchange in the United States, we will get a Bitcoin spot ETF. I think it happens. I think that we are seeing that happen. We've seen a lot of progress in the past 6 months in terms of conversation, in terms of moves in terms of political things that are happening in the whole country. Research, of course. We're very robust on research. Do we provide research to the SEC? Yes. Do we provide research if you go to our website? Yes. I think anyone in an emerging asset class has to be focused on educating and robustly focused on research. So, yes, we have research, if that's the question.
But what's the reception? Are they getting it, or is there, because we still don't have anything?
Well, they're getting it. We've come a long way. We have a futures product. That's a big thing. I don't think we can disregard that. When do we get the Bitcoin spot ETF? Probably in the next couple years. I'm not going to make a prediction. I'm sure the gentleman on the stage would have some maybe earlier predictions than mine. It's possible that we get an ETH futures ETF before we get a Bitcoin spot. I don't think it's out of the realm of possibility. When you're working with regulators, It's a structure, and it fits into a box. It's just like investors. It's a box of CME futures are regulated, and the exchanges are currently not. They don't have any transparency into it, and even if we believe in blockchain transparency, which of course we do, and we write research about it, and blockchain is probably the most transparent investment opportunity that's ever happened in the world, I think we're still getting there.
I have one point where I completely agree and one point where I disagree on that.
Right.
The point where I disagree, you don't need the underlying spot exchanges to be regulated as national securities exchanges in order to have a spot Bitcoin ETF. There are a huge number of ETFs, most of the commodity ETFs, where the underlying spot commodity is not a regulated market. They don't regulate gold trading on 42nd Street, and yet we have GLD. So you can have unregulated or spot markets that aren't regulated at the national securities exchange level and a regulated futures market and still have a spot ETF. There are dozens or hundreds of examples of that. The thing that I strongly agree with is there's a perception in the crypto industry that the SEC is just saying no. And that's not what the facts show. What the facts show is we got approval, I think from NYDIG for a limited interval fund in the crypto market, the first sort of regulated approved fund. We got a 40 Act futures ETF. We got a 33 Act futures ETF. That's a progression that ends in a spot Bitcoin ETF. So they really are making progress, just not at the pace that the crypto community, but it's wrong to see them as just saying no.
Yeah, I agree. And another point is, it was not that long ago that we were really having a question about, if this was going to happen. And now it's clearly a question of when it's going to happen. And to add some other examples to what Matt has talked about, I mean, even largely, senior loan ETFs, fixed income ETFs, those are markets that don't have tremendous amount of transparency into them. And it's not to suggest, and the SEC wouldn't, and we wouldn't, think that they should, that because they've done something in the past, it just means they should automatically do it in the future. They obviously have to pay very close attention to the underlying, components of that market. But, also in the past 25 years of the ETF's existence, when you brought a new asset into an ETF wrapper, the SEC was looking very closely at how the ETF would behave and very closely at how the underlying asset would behave. We've come a long way in the ETF marketplace that now the ETF has really kind of been a battle-tested wrapper that has gone through many market cycles and had, tons of opportunities to fail, and it has succeeded. And so now that ETF wrapper is really a point of credibility for the underlying asset. It's a point of credibility for, small self-directed retail investors all the way to the largest institutions in the world. And that's another credibility point that, needs to ensure the SEC makes a good decision.
Yeah, the last thing I'd say on that, the other thing ETFs always do are they drive down costs and they make it simpler and easier and more secure for investors.
That's right.
The reason we want a Bitcoin ETF, even if no one in this room is going to buy it, because they're going to go on Uniswap or do it directly or whatever, is because it's going to crush the cost structure in the fund management space. It's going to drive down costs and bring in a broader group of investors. It's going to be a net, strong positive for Bitcoin ETF investors and other crypto investors.
That's right.
And that's really important to keep in mind.
ETFs have done that for every asset class.
Yes.
Well, it's an affirmation of an asset class. And that is when we get there, which we will, that will be an affirmation of this asset class, which everyone in this room has probably been following this asset class for a number of years. But there's a number of people that are just starting, they might not have even started to digest it yet. So I feel like, we're at the precipice of something huge. And gold's been around forever as a monetary source. I think blockchain, Bitcoin, everything in between, people can't even visualize. Like we talk about miners, and they don't understand that that's actually technology. It's like data centers. They think about, because it was named miners, they think of it's an actual mining operation. We are very far in terms of education for the majority of people, but the opportunity when it gets approved and once kind of the learning curve, and not dissimilar from when the internet came to be, Web 2.0, the opportunity is huge. And I think we'll look back on this in a decade and it will be very interesting.
You answered my next question. So let's say Q4, there's an approval. What does this mean for Bitcoin and the industry at large, Dave?
Yeah, so I think, when we talk to advisors, and advisors are frustrated because they're largely sitting on a platform that doesn't allow them to give their clients access to Bitcoin or other, crypto assets. It's frustrating for them, and it's also frustrating for their clients. And meanwhile, the client is trying to get, at the very least, information about how they would allocate to, crypto or allocate to Bitcoin or ETH or other crypto assets. And so, if we do get an approval, the ETF, again, being a battle-tested wrapper, that is something that is largely approved on many of the wirehouse and the large, broker-dealer wealth management platforms, it would open up a much broader user base to access the asset. And many of you in the room are probably thinking, I would never want to have somebody else hold, my crypto assets, and I want to have control over my wallets, my keys, et cetera. Well, there's a lot of individuals and a lot of advisors and a lot of, where the wealth is in our country that actually doesn't want that responsibility and wants to cede that responsibility to somebody else. And, we believe that there's going to be a very strong change to the demand profile for the asset, and would have a very positive impact on the asset price.
And Matt, from your perspective?
I think many in the crypto community get this wrong. I think the perception is day one, the Bitcoin ETF launches. Day two, it has $30 billion in assets. And that's just not the way
Takes time.
ETFs work. If you look at gold, gold was the fastest growing ETF of all time, GLD. It hit $1 billion in 3 days. After 1 year, it hit $3 billion. After 5 years, it hit $80 billion. Yeah. I think the effect of an ETF will be overhyped before it launches, and then people will sort of dismiss it, and then eventually it will be the largest way that investors hold Bitcoin, and it will open up the market. But I think the effect will be felt most in years 2, 3, 4, 5, and 10 as it brings Bitcoin into the mainstream. I think it'll be that kind of trajectory.
Yeah, the hype before, look, we've all seen lots of ETFs come to market. The hype before BITO launched was, and the watch of the 75-day clock until that product was potentially going to be approved was something that I hadn't really seen before in my career. It was great to see that the SEC approved that product and there was, strong investor appetite. But, look, when you look at commodity-based ETFs and you think about kind of futures versus spot, instances where a commodity can be reliably stored like gold or silver or other hard assets. The marketplace has really demanded a spot-based product and has preferred that. In instances where a commodity can't be reliably stored like corn or oil, the market essentially settles for a futures-based product. And we think that the same is going to be true for Bitcoin, so we do think there's going to be a higher demand profile for spot than there is for futures.
Got it. And then on the demand side, what have you been hearing from the advisors, right? Because a lot of them have clients coming in, they have spot exposure, a lot of them are younger. What's that demand profile like? Lori, can you talk a little bit about that?
Sure, of course. I think, as in everything, it's evolving very, very quickly. There is, of course, the advisors are having the issue of how do I get a fee on top of someone that's managing a Coinbase account? That doesn't work. There's obviously other vehicles that you can get exposure, but an ETF would be simpler. It would plug into their systems. There's obviously an opportunity there. That's what ETFs do. They provide access to an asset class. But we still have a long way to go, and I think advisors, in terms of demand, I think there is demand now. I think in a year there's going to be an ever-evolving amount of demand, and as Matt said, this is the beginning of something. It's I wouldn't say that we're at the finish line with the Bitcoin spot. It's the beginning of what's next.
Got it. And you're constantly surveying advisors, right? Anything from the data?
Yeah, advisors are year after year getting more questions, allocating more to clients, using Bitcoin more in their own personal portfolios. One fun fact, this past year, we do a survey every year of financial advisors. The number of advisors holding it in their personal portfolio went from 24 to 49% of all advisors, and that's a leading indicator of where the market is going. The other thing I would add about advisors, which is not always understood, is it's a huge market. Financial advisors control 2 to 4 times as much wealth of self-directed retail investors and as much as the institutional market. Right. It's a big thing, and they want to allocate to crypto, but right now it's hard and the solutions are imperfect. Right. And a Bitcoin ETF would just make it so much easier.
Got it.
Yeah, ETFs are, advisors tell us that ETFs have been proven building blocks for their clients' portfolios to give them access to a very broad range of assets, and they can't reliably do that with Bitcoin right now. They can with the futures product, but they also recognize some of the inherent complexities and some of the detractors of how a Bitcoin futures product works. they're utilizing that in the absence of something else. But ultimately, advisors want to have a really holistic picture of their client's portfolio, and as they're losing money to other crypto-based platforms, it's making it increasingly more complex for them to understand that. And so we're hearing from our advisors, and Matt makes a great point. Wealth management platforms, RIAs, independent RIAs. It used to historically been thought that was in asset management picking up nickels and dimes. It's not. It's picking up dollars. They're a huge portion of the marketplace and need to be paid attention to, and they're interested in ETF.
And have you witnessed any shift in demand recently with price action?
I mean, in terms of demand in general for the blockchain, Web3, Bitcoin ecosystem, we just closed a round of funding for our firm, so it doesn't seem that investors are becoming more skeptical of the asset class. I think there was certainly some concerns with Terra. I often hear investors say it's like Lehman, so it's scary. But in terms of investors making new allocations, starting to think about this asset class, no, it's not changing. We're hearing more and more, and I think the bear market is always where innovation is built, and we will continue to build.
I'll give you a fun story. I've been on the road talking to financial advisors. I did the same thing in 2018 during the last major bear market. The main question I got in 2018 was crypto going to go away? Was the government going to regulate it out of existence? Was it just fake internet unicorn money that fell from the sky? Was it worth zero? The number one question I got in meeting with over 1,000 financial advisors through panels, conferences, one-on-one meetings, dinners last month was, is now a good time to buy? And that's just a fundamental difference. Is it going to go away now that we're in a bear market versus is now a good time to buy? And what that tells us—
Is it a value investing opportunity?
That's exactly right.
That's what we get at that.
It's a sea change in how professional investors are thinking about crypto. It leads me to believe that whenever the sort of market bottoms out, we're going to see a relatively sharp recovery because there's a lot of money that was sitting on the side thinking about crypto, studying it for a year, and now they want to go in, and that wasn't the case the last bear market.
Yeah, agreed. We engage with our investors as long-term holders of the product, and it's no secret that our product is trading at a discount. We get lots of questions about that product trading at a discount. We've gotten over 10,000 comment letters. That is, many of them are talking about the reality of an ETF being able to collapse that discount. But we're also seeing investors come into our product because they see it as a buying opportunity. If they're long-term holder of Bitcoin and they believe that eventually an ETF is going to get approved, then it has an opportunity for them to have a very quick kind of 30% return.
Right.
So it seems like they want exposure to the product or the asset rather than timing it for the fundamental properties at least.
And a long-term holder.
Long-term, okay. And then for now, with futures and ESG, talk to us a little bit about that. Matt, you want to start?
Yeah, I think for financial advisors, Bitwise offers a variety of solutions. So we have a picks and shovels ETF, BitQ. We have an OTCQX traded trust like Grayscale, BitW. And we see significant interest in SMAs that we just rolled out. And some advisors are interested in private placements. I think all fund managers who are focused on the advisor market are just trying to offer it in every different sleeve they can. And we see really demand across all those, the equities, the private placements, the OTCQX, and there is real interest right now in SMAs.
Interesting.
Yeah.
Lori?
Matt kind of did the rundown of what's available, so there's not much for me to add in terms of the menu, but I will say that a lot of the conversations we have are about an appetite for where does this go in terms of active investment. And so I think that we will see those continue to develop. We're obviously seeing access to this asset class in like hedge fund structures and things of that nature. So we will probably see in the future active ETFs. When that happens, I don't know, but I think that's kind of the trajectory we're on in terms of future innovation in the financial services space for this.
Yeah, and I think single assets and getting single asset exposure in an OTC quoted product, or having kind of an equity-based traditional ETF kind of offering, that picks and shovels, or in our case, we kind of define like the digital economy in a thematic exposure. But I think what we're going to see in the future is an opportunity to have some advanced kind of indexing strategies, things that are very commonplace in the equity marketplace, whether it's a factor strategy or a multi-factor strategy, be applied to some digital assets. And so to be able to kind of take advantage of a momentum strategy or a multi-factor strategy, or taking a factor that doesn't exist in the equity markets but does exist in the crypto markets, is something that I think is going to be an evolution that investors are going to realize, and I think asset managers are going to take advantage of.
Got it. And one question I didn't ask was, what happens if the SEC says no? What do we do? Do you just keep on going?
Hopefully we don't sue them.
Matt,
Interesting.
No, I'm saying hopefully we,
Are you hiring?
collaboratively, we do not.
she said it.
Are you hiring the lawyers like Grayscale?
That's probably not the best tack with the SEC. You never win against the feds.
Interesting.
But
So
Yeah.
look, we're focused. Matt very quickly looked at me when you asked that question.
Well, you have the team of lawyers at the ready, right?
Yeah, look, we're very focused on July 6th. We're very focused on an approval. We are certainly ready to address all options depending upon what decision the SEC makes.
Got it. Matt, are you ready?
Oh, I'm ready. We're going to get there.
We're gonna get
If we don't win approval in the first week of July as well, we'll try again. We're really committed to bringing an ETF to the market because it's going to be better for investors and better for the space. So one way or the other, it makes sense.
It makes sense.
I think we're all united on that.
we are.
I think investor protection is in all of our best interest, right? And like you said earlier, it's not a race, right? You got to be patient, especially with regulators.
Absolutely.
I think we've right on the nail. It's great conversation, guys. I appreciate it. And enjoy the rest of the conference, everyone.
Thank you very much.
Thank you, Matt.